Welcome to the world of value investing in the tech sector. Did you know that some of the best tech stocks are trading at bargain prices right now? It's true. Even giants like Apple and Microsoft are undervalued. Surprisingly, Apple's services revenue surged by 24% last year, but its stock price is still attractive for value investors. We often think of tech stocks as high-flying and expensive, but that's not always the case. There are hidden gems and industry disruptors available at discounted prices. For example, Roku's active accounts grew by 51% last year, yet their stock is still a steal. And did you know that Nvidia's revenue from AI chips jumped 40% last year? Yet, it remains a great value pick. In this video, we'll uncover hidden tech gems and highlight industry disruptors available at discounts. We'll also dive into companies with strong earnings that the market is overlooking. You'll learn about tech titans poised to dominate future industries and discover companies that are bouncing back from tough times. Ready to find out which tech stocks are on sale? Let's dive in and explore the best value picks in the tech sector. 1. Unveiling hidden tech gems. When it comes to value investing, finding hidden gems in the tech sector can be a goldmine. These are companies that fly under the radar but have solid fundamentals and great growth potential. Let's dig into some of these lesser-known tech wonders. One such gem is Coupa Software. They specialize in business spend management. While not a household name, they have a robust platform that helps companies save money. In 2023, they saw a 34% increase in revenue. Their stock price, however, hasn't caught up yet. Another overlooked tech company is Ping Identity. They focus on identity management and security, a sector that's crucial in today's digital age. Despite their importance, they're trading at a discount. Their annual recurring revenue grew by 19% last year, yet their market valuation doesn't reflect this growth. Elastic NV is another name to watch. They provide search solutions for companies, helping them manage and analyze data. With the explosion of data, their services are in high demand. They reported a 30% year-over-year revenue increase, but their stock price is still underappreciated. Investing in these hidden gems requires a keen eye for detail and a willingness to dig deep into financial statements. Peter Lynch, a legendary investor, once said, "Invest in what you know." This advice is golden when searching for these undervalued treasures. Look at Cerence, a company specializing in AI for cars. As vehicles get smarter, Cerence's technology becomes more valuable. They recently secured a multi-million-dollar deal with a major automaker, yet their stock remains undervalued. Digital Turbine is another under-the-radar tech stock. They focus on mobile advertising solutions. With a 146% increase in revenue in the last quarter, their potential is massive. However, their stock price doesn't yet reflect this growth. When scouting for hidden gems, it's essential to consider the company's competitive edge and market position. Warren Buffett once said, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." Keep this in mind as you evaluate these underappreciated tech stocks. 2. Disruptors on discount. In the tech sector, some companies are not just participants but disruptors. These are the firms changing the game, yet they're available at a discount. Let's explore some of these disruptors. Roku, for example, is transforming how we consume media. Despite its massive influence, Roku's stock is trading well below its peak. With streaming becoming more popular, Roku's future looks bright. They reported a 51% increase in active accounts last year. Another disruptor is Square. Known for revolutionizing digital payments, Square is much more than a payment processor. Their Cash App saw a 212% increase in revenue in 2023. Despite this, their stock is undervalued compared to its high growth potential. Twilio is making waves in communication technology. They provide the backbone for many of our favorite apps. In 2023, they reported a 65% increase in revenue, yet their stock hasn't soared as expected. Twilio's innovative solutions position them as a key player in the tech industry. DocuSign is another disruptor, transforming how we handle documents. Their e-signature solutions are becoming industry standard. Despite a 45% revenue increase last year, their stock price is attractive for value investors. Shopify is revolutionizing e-commerce. Their platform allows anyone to set up an online store with ease. Shopify saw a 57% increase in gross merchandise volume in the past year. Despite this growth, their stock price is still a bargain. These disruptors share common traits: innovation, growth potential, and current undervaluation. Investing in them means betting on their ability to continue changing their industries. As Charlie Munger said, the big money is not in the buying and selling, but in the waiting. Patience is key when investing in these tech disruptors. Remember, it's crucial to stay informed and continually research these companies. Markets can be unpredictable, but with the right knowledge, you can uncover great value in the tech sector. 3 earnings powerhouses in disguise. When we talk about tech companies, we often think of flashy startups or household names. However, there are tech firms with incredible earnings power that the market tends to overlook. Let's explore some of these powerhouses. First up is Texas Instruments. You might know them for their calculators, but they're a giant in the semiconductor industry. Last year, their earnings per share, EPS, grew by 20%. Despite their solid performance, their stock is trading at a reasonable price to earnings, P/E ratio of 20. Next, let's look at Cisco Systems. This company is a leader in networking hardware and software. They have a strong balance sheet with over $20 billion in cash reserves. Cisco's EPS increased by 11% in the last quarter, making them a solid choice for value investors. Microchip Technology is another example. They specialize in microcontroller and analog semiconductors. Their revenue grew by 26% last year. Despite their strong earnings, their stock remains undervalued compared to their peers. Qualcomm is a name that might surprise you. Known for their mobile processors, they're also a key player in 5G technology. Their earnings grew by 31% in 2023, but their stock price hasn't fully reflected this growth yet. Investing in these earnings powerhouses requires a focus on financial health and profitability. As Benjamin Graham, the father of value investing, said, "In the short run, the market is a voting machine, but in the long run, it is a weighing machine." These companies have the earnings to tip the scales in their favor. Intel is another company with strong earnings potential. Despite some recent struggles, they reported a 21% increase in their data-centric business revenue last year. Intel's commitment to innovation and expansion into new markets makes them a compelling value pick. Finally, consider Broadcom. They're a leader in semiconductor solutions for wired and wireless communication. Broadcom's EPS grew by 18% last year, yet their stock is still trading at an attractive valuation. 4 future-proof tech titans. Looking ahead, some tech companies are well-positioned to thrive in emerging sectors. These future-proof titans are not just playing the current game, they're setting up for the next big thing. NVIDIA is a prime example. Known for their graphics processing units, GPUs, they're now a leader in AI and machine learning. NVIDIA's revenue from AI chips grew by 40% last year. Despite this, their stock remains a valuable pick for long-term investors. Advanced Micro Devices, AMD, is another company to watch. They're making significant strides in both the CPU and GPU markets. Last year, AMD's revenue increased by 45%, largely due to their advancements in high-performance computing. Tesla isn't just a car company, it's a tech powerhouse. Their energy solutions and AI-driven autonomous driving tech set them apart. Tesla's energy sector revenue grew by 50% last year. Investing in Tesla means betting on a future where sustainable energy and AI play central roles. Palantir Technologies is a big data and analytics company that's transforming how organizations handle information. They saw a 47% increase in revenue last year. Their ability to provide actionable insights from massive datasets makes them a future-proof investment. Unity Software is revolutionizing the world of augmented and virtual reality, AR/VR. Their platform is widely used in gaming and beyond. Unity's revenue grew by 43% last year. As AR/VR becomes more mainstream, Unity is positioned to lead the charge. CrowdStrike focuses on cybersecurity, an area that will only grow in importance. They reported a 61% increase in annual recurring revenue last year. In a world where digital threats are constant, investing in cybersecurity firms like CrowdStrike is a smart move. These future-proof titans are leveraging cutting-edge technology to secure their places in tomorrow's markets. As Warren Buffett said, the best investment you can make is in yourself. Educate yourself about these companies, and you'll be better equipped to make informed investment decisions. 5 tech turnarounds, from struggles to success. Sometimes, the best investment opportunities come from companies that have faced recent challenges but are on the path to recovery. These tech turnarounds can offer significant upside for savvy investors. Intel is one such company. They've struggled with delays in their chip manufacturing process, But new leadership is turning things around. They've committed to investing $20 billion in new U.S. manufacturing facilities. This move could position them to regain their competitive edge. Another turnaround story is IBM. Known for its legacy hardware, IBM has been transitioning to cloud computing and AI. Their acquisition of Red Hat has started to pay off, with hybrid cloud revenue up 19% last year. This shift in focus is revitalizing IBM's growth prospects. Snap Inc., the parent company of Snapchat, is also on the mend. After a rocky start as a public company, they've refined their ad targeting and user engagement strategies. Their daily active users increased by 18% last year, showing they're back on track. GoPro faced significant hurdles with product flops, but they've since restructured their business. By focusing on subscription services and direct-to-consumer sales, GoPro's revenue increased by 28% last year. Their shift towards profitability makes them a compelling turnaround candidate. Investing in turnaround stocks requires patience and a belief in the company's new strategy. Howard Marks, a noted investor, says, "You can't predict, but you can prepare." These companies have prepared well for their comebacks. Twitter has had its share of controversies and management changes, but their new focus on monetizing user engagement is promising. They've introduced new features like Spaces and Super Follows. Their revenue grew by 22% last year, signaling a potential turnaround. BlackBerry is another intriguing turnaround story. Once known for its smartphones, BlackBerry has pivoted to cybersecurity and IoT solutions. Their cybersecurity revenue increased by 12% last year. This shift is helping them carve out a new niche in the tech sector. 6 undervalued giants. Big names, bigger discounts. Sometimes, the biggest companies offer the best value. These undervalued giants are industry leaders trading at a discount, making them attractive for value investors. Apple is a prime example. Despite being one of the most valuable companies in the world, their stock is trading at a P/E ratio of around 28. With a loyal customer base and strong product ecosystem, Apple continues to grow. Their services revenue increased by 24% last year. Microsoft is another tech titan worth considering. Their cloud computing arm, Azure, saw a 50% growth in revenue last year. Despite this, their stock remains reasonably priced compared to their growth potential. Alphabet, Google, continues to dominate the online advertising space. Their YouTube ad revenue grew by 35% last year. With a P/E ratio of 23, Alphabet offers both stability and growth, making them a strong value pick. Amazon is not just an e-commerce giant. Their cloud computing division, AWS, is a cash cow. Oz revenue grew by 37% last year. Despite their massive size, Amazon's stock is trading at a discount relative to their future growth potential. Meta Platforms, Facebook, is another undervalued giant. Their focus on the metaverse represents a significant growth opportunity. Last year, their advertising revenue increased by 21%. With a P/E ratio of 15, Meta offers substantial upside for long-term investors. Investing in these giants means betting on their continued dominance and growth. As John C. Bogle, the founder of Vanguard, said, "Stay the course." These companies have proven track records and strong fundamentals, making them reliable choices for value investors. Oracle is often overlooked but remains a powerhouse in enterprise software. Their cloud revenue grew by 22% last year. Trading at a P/E ratio of 16, Oracle offers a solid combination of growth and value. Lastly, Salesforce is revolutionizing customer relationship management, CRM. Their revenue grew by 24% last year, yet their stock is still undervalued compared to their potential. Salesforce's continued innovation and market leadership make them a compelling value pick. These undervalued giants offer a blend of stability and growth, making them ideal for value investors looking for reliable returns.